Good evening, everyone. It's Chris from Soul Society R as well as Excel. You can find us on the websites, Twitter, Instagram, as well as Discord. Remember to smash the like button, share with your friends, subscribe to the YouTube channel on weekly basis. It's for free. We use this adaptive algorithm for the side market, up market, as well as the down market. And remember, use at your own risk. And data may not be copied unless requested from us. Let's go to the first slide that I have up here, and I wrote on it, was Friday sell-off in the stock market the beginning of something cooking under that hood in the S&P 500, the value, the Nasdaq 100, and so on? I had listed in here things to consider: the tech sector, the energy sector XLE, the tech sector XLK, VTV, the value, large cap growth in Schwab, ITV, the builders, and I mentioned Nasdaq as well as the S&P 500 here. You can use the large contract or the QQQ in the ETF, the SPY in spiders or VU, and the value play is RSP. Small cap is IWM. I did not mention it in here. And to keep an eye on the different commodities in the overall market. You can see here on we've been going grinding for the last 20 days in this range. We looked up above. This was the annual, the basically the high that we created in the SPX, which is similar to the SPY. We created 6147.43. If I take this high and we end up losing the 50 SMA and the 116 SMA, we have here F6, which is a 61.8 coming down from high to low. It's showing you the zero line, the 61, the 50, and the 38%. I don't have the 23 here, and I don't have the 78. This will match with the 116 simple moving average coming back to the 61.8. We had lost about 2.5% from the highs, and if I look all the way down to 5800, we would have, if we end up coming down all the way to the candle where we had this gap, and that would be a minus 5.65% in the downtrend in the S&P 500, or vice versa. If we end up losing the 200 SMA and we come all the way to this consolidation from the prior months, in September, October, in November before the rally in December. Then we had the reset. Then we had the January low that we created. We rallied up in 2025, but we've been consolidating between February and January. And Friday sell-off was a large candle on the downside. In order to get 5,600, that would be a minus 8.92% from this high up here. But I want you to remember, we trade what we see, not what we think. And I hope this slide will kind of give you an overall view on the 11 sectors in the S&P 500. I have them listed up here. They will show you here. It says, S&P 500. This is the S&P 500. It's still lost 1.71% that day. It shows you the energy, discretionary, consumer products, utilities, material, consumer staples, info technology, real estate, industrial, healthcare, and telecommunication, not including the Mega 7 or the Fantastic 7 on the NASDAQ 100. Remember to smash the like, subscribe, share with your friend, get in contact with us. We're here to help you and show you the right way to trade. Let's go to the first slide up here. And what I did, I put VU here, which is similar to the SPY in the spiders. And you can see that's the Vanguard S&P 500. What I wanted to show you is that this consolidation here, we tested the 38.2 almost and the 50 simple moving average on the daily and bounced off the close just slightly above it. If there's going to be continuation, would we have a gap up or gap down? We have to pay attention to F3, F5, and F6 and the 116 SMA, and this gap in the S&P 500 or the ETF in the SPY. So that's VU. Let's take the energy equity. The energy sector, as you can see, we've been consolidating for since the December low. We rallied up in January, came back in February down. We tried to rally, but this is an inside candle. If I connect this control point or pivot point in the chart to this high here, because we looked up and failed, that's a symmetrical triangle, and I can do the same thing here, connecting those two lines. So what I'm going to do is in the XLE, put those two control points or pivots, they call them, or control point. I call them control points, where our high and lows. We are in a symmetrical triangle, and I would pay attention to the electronically traded fund in the energy sector if there's going to be a breakup or breakdown in. Let's next to the XLK, which is the technology sector in the spiders. And we can see in the technology sector in the spiders, since the October, November, December, we've been range bound. We have looked once, twice, three times, four times, five times, six times, and we eventually failed. We failed the 50 SMA and the 18. They've been zigzagging here. We are in compression, trying to come out of this expansion and contraction, because we trying to expand up, come back in, expand up, come back in. So this bottom down in this area is very important, the 61.8 and the 116 SMA. If I end up losing this, I'm looking for the support and the 200 SMA for the first clue of consolidation if we find support in the XLK, or there may be rotation in the tech sector. So pay attention to that. Next, I want to look at the ITB, the home builders, or you can look at the XLRE, which is part of the S&P 500, and we can see in the home builders, instead of, we're trying to grind up in January, and eventually in February we sold off. We're a little bit bottomed on that short term. What I want to do is go to an annual chart. We're going to go custom. Instead of here, you can see this is 9. What we're going to do, make it 1/1/2024 till till February 2022 and 2025. So we can see that this consolidation, after looking up, came back down. If this is considered a shoulder, this is the head. Is this the other shoulder, or are we going to revert from the mean, or are we going to fall to the backside of this channel in order to find support in the home builders? That's the home builders. Take a look at now as Schwab SCHG, because I had wanted to mention these sectors in the overall market in the S&P. This is the large cap growth. Even if I take the January, low here, but what I want to do is go back as far as the November, October area. We can come to this area and we can zoom in. And what I wanted to show you is this gap, because after the consolidation here, we fell down, we gapped up. We continued, retested this area, but we didn't fill this gap, rallied high. We got these gaps in between, which are filled, and coming back down. We had this gap, we filled up, came back up, came back down. We zigzag, and this sell-off here is very sharp. Every time we had some kind of a large volume down, there was a sell-off on the candles. Is this going to be continuation, or is it telling us at the 61.8 this is support, or are we going to find support here and fill the gap in large cap growth? So there may be a little rotation in these. I want you to pay attention to them. And what I want to do is go over VTV. I think I might have mentioned it. This is the value play in the S&P 500. We can see after this large consolidation here, we've been zigzagging for a while. We have this gap here in this consolidation after we created some kind of an M pattern or a W. We rallied up. If we end up losing the 116 and the 38.2, I'm going to look for this 100% of this gap in VTV in case things turn to the opposite side in the Fortune 500 and the Nasdaq 100, not including the small cap IWM. And what I want to do is show you IWM and go back to two different sectors in the S&P 500 and show you how to use the measured move. But what I want to show you is in the small cap, we've been, range bound. We tried to look up here in November, December. We fell down. We tried to consolidate, rally up. We had those four tops. And eventually on Friday, the small cap sold off very sharply. And we closed on the daily below the 200 SMA. There's a small section here, which is the gap. What I want to do, edit the property. You can see I always create boxes for these areas that are never filled. We're going to put it at 2 so we can see where it's going. So at least we have an idea in case we do fill this gap. Do we come back to this area of consolidation or the breakout, or do we find support here and bounce off? Pay attention to small cap if there's things opportunity in small cap. Let's go to the micro S&P 500. And what I want to do, instead of using the daily, we're going to go on a chart making a 30-day range. We're going to go to an intraday. Instead of using a 1 day, we're going to go to 30 days range so everyone can see it. I'm not going to use 4 hours or 2 hours. I'm going to use 6 hours. It's going to show you the gray area, which is the overnight action in the European, Asian markets, and the US markets are usually in black. So I can see that there was a consolidation from the last 4 weeks, looking up, coming down, looking up, coming down, consolidate, rally up. Couldn't make it. We kept going, grinding, and all of a sudden on Friday we couldn't make an high move, and all of a sudden the breadth of the market on the S&P 500 sold off. We had this uptrend channel which we eventually lost. You can see it here. I had put it on the daily. We're going to remove it. And what I'm going to do, use the overnight. We can connect this control point with this control point. You can see that we lost this uptrend channel. If we're going to fall through that 60 where we found support at the 60 20 75 from the prior 2 weeks on the federal announcement where we fell off, rallied up, but we did in the overnight half the distance and rallied, continued higher. Then we grinded for a week or so, then fell off after the Monday holiday. And you can see here on that dump, we came back to this consolidation where we tested it once, twice, 3 times. Is this the fourth time going to open the 61.8 fib to continue lower to fill the 59.50 area 35, or do we continue to the backside of the 58.50? So very important, we're going to trade what we see. I am not saying the sentiment is still bearish. We are still in an uptrend, but on the short term you can see that we have lost on the 30-day that trend channel on the charts, and we are underneath the 200 and the 116 SMA. These two important moving averages are important for me, and I'm going to pay attention to the 50 SMA. So if I'm going to measure this distance for the measured move, what we can do is grab this measured move from the prior week's high, which is this week's high. We're going to go into a new week. So this is the high and low. The extension are usually minus 80 to minus 100. Usually you find some kind of support unless we have two standard deviation and vice versa to the top, or we get two standard deviation to the top and two standard to the bottom. I still have this oval down here showing on the daily chart, because if I go to a daily chart and I zoom in, I still have this area. You can see I marked it. I put the 200 SMA. What I'm going to do is move it up here where this gap is, not the gap, is actually catching up with the 200 SMA. I'm going to keep moving it up until we see opportunity on that 200. If we test the 116 SMA on the daily and bounce off, that's great, because you can see on the measured move S&P 500 we have lost the 18 SMA as well as the 50, and that uptrend channel that you can see on the charts in the measured move on the S&P 500. Let's go back to a 30-day intraday, and I'm going to do the same thing with it on the NASDAQ 100. We're going to go 30 days. We're going to go 6 hours, push OK. And instead of the S&P 500, we're going to go micro NQ, or you can use the QQQ. We can see that the weekly high that we created here, we can take this high to this low here. We can extend it to the left, and we can see where our levels are. In the NASDAQ 100, we have lost the 50, we have lost the 116, we tested the 200 SMA and closed just slightly underneath the 200 SMA in this consolidation here after that Wednesday look. If I end up losing this area and this area, I'm looking for the backside of the 21,000 on the NASDAQ 100 if things go south. So let's take a look at the NDX on the daily. That's the NASDAQ 100, or you can use the QQQ. I want to show it on the weekly chart. We had mentioned this high up here to this low, and you can see that this candle was an engulfing from the prior week's range. So I am paying attention to the 18 SMA in this uptrend channel. We are still intact. We have not lost it on the weekly. Let's go to the SPX. And what I wanted to do on the SPX, so we can do the SPY. And the reason why I want to show you how to do this on the weekly, I'm going to go to a 5 year weekly to show you from the March 23rd of 2020, the COVID, to this high here, if I do a measured move from high to low, I want to show you that this distance, you can see it here, we created 150% higher from that area after we broke out after the January in 2023 through 2024 and the rally up, and we consolidated up here, but we are still in an uptrend holding the 18 SMA in this little uptrend channel on the S&P 500. If I activate this Fibonacci, I'm going to go activate it, and I grab the low of October 2023, which you can see everyone here. We duplicated the same distance from high to low. We went 100% back up to the 200% higher, and vice versa. If I take the bottom from the March 23rd of 2020 till the high in December or January 2nd or 3rd of 2022, that high before we fell down in October, we created that low in October 10/10 of 2022, and we started, coming back on a cup, the handle, and eventually the breakout. You can see we have the same numbers up there on taking the measured move instead of using just a regular Fibonacci. I hope this video was very helpful. You have questions, once again, check us out on the website. Get in contact with us, give us a call. Let us know how we can help you, and smash the like button. Take care and good night.